on? YouTube, talk to me. Okay, we're live. Good morning, everybody. Welcome to the morning show. Stock Market TV. Spencer Israel, Steve Strazza. JC Parets is feeling a little under the weather today. Hopefully, he'll join us. He may not. He's got some kind of a stomach bug. I don't know. But we got so much going on today. It is insane. So we'll have Kenny Glick stop by, as usual, right? Hopefully at around 8:55. We will have the one and only Jeff Weiss. I call him my CMT uncle or Uncle CMT. He would join us at 9. All right. We'll have Sean McLaughlin hop in maybe around 9:15, 9:20. And then at the tail end of our show, we will have the one and only Stephen Weitzel pop in for a few minutes. So we have a lot of things happening on the show today. Actually, Thursdays are our busiest day on the channel because we got the morning show. We got Stephen Weitzel's new show, which is every Thursday at 10 o'clock, the $1 million question. We have Kenny going live at 11. We have the Gold Rush going live at 2. We have Sean going live at 3. We have Louis going live for Crypto After Dark at 9. So we got Steve is doing his thing for members at 11 o'clock with Brick and Multiplier. So a lot is going on today on the network, on the YouTube, on everything. So I hope you're ready. I'm ready. You're here. I'm here. Steve's here. And we got our charts, as always. Chartmaster Rick. Let's do this.
Hey, Spencer.
I am running on adrenaline. I did something last night that I haven't done probably for 3 or 4 months, and I stayed up till super duper late.
I saw some late night pings from you.
Yeah. I was pinging people at 1 o'clock in the morning. Yeah.
I like that. I'm for that. That's fantastic.
I try not to do it. I used to do it a lot more. I don't do it nearly as much now. It's probably not good for you. But yeah, let's do it.
Spencer's getting after it because the truth is, it's not just an action-packed day. This is going to be an action-packed long weekend starting today with Chart Summit.
Yep.
And we're really hitting it hard again on Saturday. I think I present first thing in the morning. So that's going to be fun.
Look at the calendar. You are first thing in the morning. That is correct about that. So by the way, if you have not signed up for Chart Summit, it starts tomorrow. A couple hours tomorrow. Most of it's Saturday. It is free. You just have to sign up to get access and then get the recording. So use the link on the screen. Use the link that is in the top of the description, and I was putting it in the chat right now. Hey, Todd, come on. We don't do that stuff here on the morning show. Come on now. This is a kid show, all right?
Maybe Adderall.
No. Literally coffee. Nothing but coffee. And like I said, adrenaline. We got a lot going on. So, isn't the market fun? Imagine you're a day trader. Imagine you like trading off of internet action or headlines or whatever. You see a headline yesterday that the president says that if you are an executive of a defense company, A, you make too much money, and B, you guys shouldn't be allowed to do buybacks or pay dividends. So
he said, do better, frankly.
Yeah, right.
Your manufacturing sucks,
right,
and you're paying yourselves too much, and no more buying back stocks or dividends.
That's right.
You do better.
Right. That's right. So you're trading. Thing. Oh, okay. This is probably not great. So let's sell the news on this. Fast forward a couple hours. By the way, everyone, says the president, we should have a $1.5 trillion military budget. Well, who's that good for? Do you figure the same stocks you sold a couple hours ago? Probably, right?
This is a great example of just the wildness of markets, especially when you get these Trump headlines. Because this was, you can't even tell what a monster move this was from the highs just a couple days ago.
Yep.
This thing got clobbered down 8%. Now it's right back to where it was, up another 8% pre-market today. Just incredible. Really good stuff.
Yeah. So, you know, you got the moves. Obviously, this is the Lockheed chart, but he got the moves in all of them here, some more than others. And then I did see he specifically singled out Raytheon, so RTX, which had it almost looks like a fat finger last night because RTX got down to 174. We're at 191 right now. So hey man, life comes at you fast if you're a trader.
Raytheon's been good. A lot of, and you know, the European defense stocks too. I feel like I'm hearing about all day, every day. This has just been a major theme for markets for a long time now. Almost all cycle, the defense stocks, not just in the U.S., but all over the world.
Yeah,
obviously we have the best ones.
Do we have any longer term charts on this theme, on this group, just to kind of drive home that point? Yeah, I think we do. We have slide 3, right? Just to kind of show the just the general strength. Yeah, there we go. Oh, that's so good. That's so good.
I got the HII. That was actually an idea. Somebody did a presentation on that. God, where were we? New Orleans? Where was Stephen Place? Talked all about the Huntington Ingalls. And I guess the bullish story there. It's been unfolding. You really nailed that.
Also, the classic, you know, buy defense stocks every time there is a U.S. military action, right? That seems to always work.
Keeps
right?
working.
Yeah, actually, it's not just U.S. Buy defense stocks anytime any military does anything anywhere, right?
Yeah.
That's a general rule of thumb. It worked a couple years ago in Ukraine. It's working. It's worked again now. So it's kind of like buying cybersecurity every time there's a hack. You know, just do it. Just don't even think. Just do it. You know?
I think cybersecurity is ready to go again. That's obviously part of the software theme, and these stocks have just been so beat up. I think you're maybe even starting to see it right now. I think software stocks running some of the best bargains for 2026 right now.
You bring up a good point because I don't typically, like, when I think software, I'm definitely not thinking about cybersecurity. I'm thinking about SaaS in my head, right?
Right.
But you're right. Cybersecurity is software. What else would it be? It is software.
Most of it's subscription based. Right?
I'm trying to pull up the ETF power rankings from this morning. There we go.
Salesforce, one of the big boys, quietly reversing trend here. Nobody's really talking about that, but CRM looking really good. You got some big VWAPs coming in from the highs in late 2024. We're above these levels. It's go time. That's probably the single best looking one here. Salesforce. Do you think Salesforce is they're being eaten by AI, Spencer?
Man, dude, it's one of those things where it's like it's probably just going to be a net positive. Like, it's easy to say that AI is going to destroy software as a service companies, but in reality, it probably just like increases demand, and they'll figure out a way to deploy it. Salesforce has been a real tough hold. This has been a really tough hold.
Yeah.
Really since the pandemic, actually, if you zoom out far enough, right?
Most software stocks.
It's hard to, you know, for me at least, it's sometimes hard to update the mental narrative I have in my head. Part of me still thinks of Salesforce as like this beast of a stock for like a decade, because it was.
It is.
But, well, no, it was past tense, right? It hasn't been for quite some time.
How long?
Like I said, 5 years.
Yeah.
It's been 5 years.
Big sideways pattern there. But I look at something like this and I just see a failed distribution pattern. Something that turns out to be a really nice continuation pattern. Probably get a great entry for long-term play here. Just pay attention to the softwares, because really the story there is that the fundamentals didn't change, right? Financials for these businesses have not changed. Growth rates have barely changed. However, they're just paying a whole lot less for every dollar of earnings, right? So a lot of these companies have gone from 30 times earnings to 15 times earnings, just straight up multiple compression. Fundamentals unchanged. I love a situation like that. Google's the best recent example of a stock that really suffered from some serious valuation compression, right? And then bounced right back.
Multiple compression.
The business doesn't have to change. You don't need any good news. The market just has to change their mind about the same business.
Yeah, it's a great point. Multiple compression, oftentimes, like, it sounds bad, but it actually ends up being like a bad, like a good news thing, right? Because it means that the company is still doing fine. And like you said, everyone just has to change their mind, right? Which can happen like that. What I just looked it up. Salesforce was added to the Dow August 31st, 2020. So good timing there, friends.
Hey,
but
you're right. It's another good example. Hey, are you excited for the game tonight? You nervous?
I suspect that's why JC is sick this morning, because he actually I believe he is sick. I don't think he's lying to us. I do think he actually is sick. I think he's so nervous that he's just throwing up.
Right? He's worried himself into a state of sick.
I think that's what
anxious about the game tonight.
I think that's what's happening. I'll probably watch it. I haven't watched a single playoff game yet, but I will watch this one.
Can't wait. Should be a doozy.
So
it's gonna be great. We're gonna have some big parties in Miami next week.
Well, that's why I'm watching, because it affects me. Yeah. Okay. Wait. What else did I want to get to before we bring on Kenny? I wanted to talk about the do we have a Constellation Brands chart? This is just a great example of why you gotta not just, if you're gonna do the earnings thing, that's cool, but you gotta just not just look at the numbers. You gotta look at the numbers and then the price, right? Because the headlines and the numbers were, they beat expectations, they beat estimates, right? EPS beat, right? Revenue beat. But if you look at the stock, you would say,
what stock are we talking about?
Sorry, Constellation Brands, SCZ.
Oh yeah, boost.
You would say, that's weird. It's not doing anything here this morning. Well, it's because it was a really low bar. Their sales are actually declining. I have it here. Their sales are down. What is it? Is it 10% year over year? And that's after they've already lowered guidance twice this fiscal year.
Nobody has fun anymore. Sad. Really.
They said something that I never heard before. Maybe it's because I'm not listening to these calls I've recorded, but they talked about the 4,000 calorie job, which I guess just means like construction and blue collar jobs, and how those people are not drinking as much. And also they talked a lot about like the Hispanic population, because they own Modelo. Obviously, it's the best selling beer in the world.
Right.
So
it's been a while already. This is really turning out to be a mega trend. Really,
absolutely. Yes, this is absolutely a mega trend. It's funny because a couple years ago you had the whole, like, everybody pivoted to like hard seltzer, but now it's just like no one drinks. So and I think actually I think Molson Coors has been the relative outperformer of the group. Last I checked, but it's been a minute. Again, because you're right,
that's tap.
That's tap.
It makes sense because Coors Light is the best beer of all beers. So I like that.
God, just look at Sam Adams. Look at that thing. That thing is in a 90% drawdown.
Awful. What happened there?
That stock was $1,300. It's $200 today.
85% drawdown. These guys sell beer. Nuts.
Jeez.
Yeah, the space has been absolutely decimated. I mean, we laugh at the weed stocks for years now, but we could be saying the same thing about beer and spirits, really.
The difference is the weed stocks we laugh because they're like jokey, because they're like, $20 million market caps. Constellation Brands is no joke, right? That's no small company.
Yeah.
So yeah, it's just, what's the market cap of Constellation Brands? It's I can't see my screen. $25 billion. So not nothing. Ouch.
I didn't even know Indiana had a football team until this year.
Yeah, I know. Hey, real fast. I want to look at a couple more real fast. How's the Diageo? Same thing. How's the Brown Forman?
Diageo. Shout out Stanford.
What? What's that to do with Diageo? Brown Forman, same thing. Oh my God, is there any? That looks good here? No, it appears not. Yeesh. All right. Don't buy alcohol stocks. That's the lesson here today. And then I wanted to talk about the home buying stocks. There was another headline, again from the president that institutions should not be able to buy single family homes.
I'm for
was
this.
Was I think the gist of it. So your open doors, your invitation homes. There's a couple more, I believe, that I'm forgetting.
We have enough problems with housing affordability. And trust me, because I've lived in an area in Key West where this became a real problem. We don't need these cash buyers stepping in to our real estate markets and booing prices further for people. It's fucking everything up. And I think Trump couldn't be more right to say that basically homes are for people, not businesses.
Steve, since you brought up Key West, what's going on with the Jimmy Buffett estate, man? The house, man. What's the deal
I
there?
have no idea. I haven't heard. I'll have to ask.
You should look into it. There's a whole there's a kerfuffle. People are kerfuffling.
Really?
Yeah.
What are they trying to do? Make it like a historic site?
Yeah, some people are. Others want to be like a bar. I don't know. You should talk to your people, man.
So Buffett's studio is an incredible piece of property, probably one of the most expensive waterfront properties in the downtown area in Key West. I mean, it's right there by like Schooner Wharf. If you're familiar with like the Key West historic seaport, it's just great locations, super cool buildings, got stickers all over it and stuff. I would assume it would be a museum or something in the future. You know, they did that with the Hemingway House. But yeah, I'll have to check that out. I don't hear things anymore. You know,
you should look into that. So anyway, if you're a home buying stock, open door down yesterday. Big open door was down 10% yesterday. More invitation homes, same thing. And then what was the third stock that I wrote down this morning, Rick? That I'm forgetting now. There was one more. It was AMH, American Invitation, right? All hit on that headline yesterday. So
it also ruins communities, especially like a small community like Key West, when half of the new home sales are going to people who aren't even planning to like live in them. It's absolutely. I saw the problem firsthand. It's absolutely terrible. I get phone calls every week from cash buyers from all these different. It's like private equity money. It's hedge fund money.
Yeah.
In many cases, and it's bad. It's bad. I'm not for it.
I have opinions too. I'm also not for it. However, I'm not entirely sure how big of a problem it actually is. Like I agree that like the Blackstones of the world should not be investing in houses. I should not be competing against Blackstone. However, I don't know how many of these homes they actually own. We saw it a couple years ago with the iBuyers and how terrible like Zillow and company were at the house flipping thing. They sucked, so they stopped. So maybe it's a bigger problem than I'm thinking it is, but I'm not. There are other structural reasons why housing is.
It would solve the housing supply problem, at least where I live, because back during COVID, talk to people and they literally blame this trend.
It's the easiest boogeyman in the world.
My friends are in real estate. They own like the big real estate brokers in the Florida Keys. Shout out Coastal Collections and Tommy, who's a big client of ours for a long time now. But these guys were so busy during COVID, and the corporations came and they bought all of the existing supply on the market. And for the past 4 years, my realtor friends work 1 day a week because the supply just hasn't come back.
There's just there it is. Maybe
no more space.
If the home builders in this country were incentivized to build more homes, this wouldn't be an issue. But hey, what do I know? I'm no economist.
But now in Key West, again, I'm talking about a very unique situation, but there's a building moratorium and there are no new homes allowed. There's nowhere to build, right? So we have a fixed supply already. They bought them all. It's a huge mess. People can't afford rent. It's a problem.
Yeah. There we go. Hey, Kenny, I see you backstage. Let's bring Kenny out, see what he's trading this morning. Was there anything on your mind besides the cyber and the and the software and the Salesforce and all that?
Broadening participation. There's more and more groups that you want to look into. There's more and more ponds that we could be fishing in. I really, really love the improving market internals. I really like the value trades here, materials, energy waking up, financials, industrials making some big moves since late last week. It's not all tech, right? I know, come on here and talk about software. You got some value stuff in the software stocks within tech, but this year, I think the price action since we started the year on Friday has been overwhelmingly bullish, right? And it's really been characterized by this big broadening of participation. So I think it's great for traders, and you could do a lot of different things out here. So broaden your mind, broadening market, you know.
Real fast, Rick, can you just pop up slide 9? And this is going to be a little bit hard for people to see, but not everything is working. Just look at what's not working on the thematic front. Fintech has been terrible, right? Anything that's payments related. IPO has been bad. Low vol has been bad. Crypto we've discussed at length. Esports, not great. There's a lot here that's not working. So just, keep that in mind. Small cap dividends, apparently. Yeah. So yeah, China internet has been very meh at the moment. So, not everything is working. That's okay. But a lot of things are. So this is a great chart.
You know what? Yeah, this is great. This is great. This actually really tells that story well, Spencer. Look at all these different thematics, right? This is what I'm talking about. Go dive into one of these groups, see what's under the hood. You might be surprised at how many beautiful looking charts are out there. Small stocks, mid-cap stocks, right? Finally joining the party in a big, broad way. There's just a lot we could do here on the long side.
See, when I look at this, I'm looking for where is it going from red to green. And so I'm attracted to global water. I don't know what the hell is in that thing. I'm going to look today. But global water just went green. I'm attracted to online retail, right? I'm attracted to like the middle of the table. You know what I mean? So that's where my eye goes right away is what's in transition mode at the moment from bear to bull. All right. Let's bring Kenny out.
Hold on. Look, real estate and housing is a regional and local conversation. Some of the comments I'm seeing in the chat here are just so stupid because you guys clearly have no idea what's going on in the community that I'm talking about. So I don't think it's like a one size fits all kind of solution. It's very micro, the housing market. So I don't think there's any reason to keep talking about it. And no, I don't think about B of A surveys, actually ever. It's just not something. I can't remember the last time I don't know if I ever spent a second of my life thinking about a Bank of America survey.
Of all the surveys, B of A Fund Manager is probably the one that I think is most interesting. I don't think any of them are good, but that is the one that I don't want to say I trust it, but it is the one I would look at. I care about that more than like Michigan consumer sentiment, right? That's worthless.
Fair enough.
But B of A Fund Manager, that's interesting information. I like that one. Okay, Kenny, are you here? Yes, he is. Let's do it.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
How many days in a row is that for the Grateful Dead garb for you? Is that like at least a week?
I don't know.
Okay, just are you okay? Just checking.
What do you mean?
Are you like showering and changing your clothes every day? I just want to make sure you.
Nah.
Okay.
I had a different sweat. I had a black shirt on yesterday.
Maybe you had the hat. That's what it was.
Switched. There you go.
You switched. That's fair. All right.
Let's talk about what you guys were talking about. You were talking about stuff that's not working, or stay with what is working: space rockets, robots, quantum AI, chips, nuclear, silver, and drones.
Wait. Hold on. It was always space, rockets, robots, AI.
Right.
Now you're extending the list, and I can't keep it straight.
No, 2 years ago, quantum. Been on the quantum, and then I've been silver since 1986. But but really drones. I mean, we gave you Mob about a year and a half ago. We gave you V-Wave about a year and a half ago. By the way, V-Wave is back in a big way. If you guys know VWAV, it's a lesser known drone stock, very illiquid, but the options are dirt cheap. We're about to cash out of those. And then there's also the Jedi, Jedi. Gave it to you about a month ago when it came out. And the DRNZ. How you doing? Don't forget about us UMAC. The Trump Jr. apparently is involved in that one. It's just again, staying focused on where the money's at. Is kind of what we do for a living. So, and again, never China. So as China's burning, good. I hope you guys all lose all your money buying those stocks. Awful. That
Jedi is going to be at like an all-time high like today.
Yes,
basically.
Yeah, and that's trading, right? And again, it's a combination of, when you have something that works. Again, I was talking with Jeff Bishop, Jeff over at Raging Bull.
Yeah,
we were talking, and he was asking me, so what have you been doing lately? And he's like, wow, this is the same exact conversation we had 3 years ago. I'm like, yeah, because it works. Because it's the same trade. It's the same trade every day. You're looking for those faux show bros. And the thing about the faux show bro, my friends, not only is it a great day trade, and we'll talk about this tomorrow and Saturday, you can expand it to any time frame you want. So just like this NAVN trade that I put on as a swing. And again, if you're not swinging some stocks right now, you're doing this wrong, because this market is just paying you relentlessly. You got to put some swings on. But that faux show bro pattern, it's basically they're shaking out the weak hands, and then they try one more time, and then it comes back. And if it does it on an earnings report like NAVN, you really have a visceral moment, because the numbers are out, everybody capitulates, the stock hits a new low, and then it comes back and it breaks out, and you get a stock that goes from 12 to 18 bucks. Thank you very much. And if you guys bought it yesterday, what we were talking about is separating yourself from the swing trader / investor / day trader. Your head's going to explode if you're trying to do all three things at once. So you have to choose. So as a day trader yesterday, if you bought NAVN at 17 and change and it went to 18.50, you've done well. If you're thinking swinging to 20, then that dollar is nothing, because you're looking for the next 2 points. You got to find yourself, you got to find that middle ground, or do what we do. Take that good day trade, take some profit from the day trade, and then let that become the swing. And that's how swing trading for me usually starts. The swing trader who gets it wrong is basically a failed day trader who says, well, I guess I'll hold on to this loser.
That's a really good point. Every screw up I've ever done has happened because I just changed my time frame on the spot.
Right.
Oh, this is now a day trade. I made money. Good. Oh, this is now a swing trade. I'll just wait a few more weeks. Right. Oh, it's now it's an investment. I'll just wait a few more years. Right.
Right.
Yeah.
When the swing trade goes wrong, now it's an investment.
That's right.
Exactly. Yep. And the joke, it's not a joke, because that's how, if you're trying to do this for a living, that's how you blow accounts up. I mean, that's how that one bad trade ruins those 10 good trades, and flies in the face of the win-loss record. And by the way, shout out again to Chicago Sean. Are we calling him Chicago Sean still? His win record, his win-loss ratio is 36.8%, and he had his best year ever, because cutting those losses off and letting the winners run. Money management, risk management, that's what this game is all about. So when you hear somebody has a 91% win rate, first of all, it's probably a scam. And nobody has a 91% win rate, First of all, they probably wouldn't be talking about it. But it's just about money management and just making sure that you don't lose your focus. And that's why I talk a lot during the day. I want to make sure everybody knows, okay, so this one's a day trade and becomes a swing trade, because look what this VICR has become, my friends. Anybody still in this with us? VICR. This started as hey, look at this chart. It was a little Andy Dufresne. And then an analyst friend, our friend that I do the podcast with, he told me about what this company really is all about. And I was like, wow, that is pretty interesting. They own supposedly a company, or part of a company, that is going to rival NVIDIA. And that's all I needed to know. And I was like, I'm in. And the stock has now tripled. And it's very difficult to day trade. You can't almost, because the spreads are too big. It's an illiquid stock. But damn, from 56 bucks that one day when we did trade it, and it became a swing, and now it's closing in on all-time highs. So when the day trade becomes a swing trade, sometimes you get a stock that goes up 300%. So let this market do its magic for you, my friends. It is fantastic.
Yeah, the VICR is interesting because it sort of it mimics the idea since you just brought up Sean. Sean, his winners define his success, his winners and his lack of losers. It's not the win rate. It's the percentage you make on the winners versus what you lose on losers. And so VICR, if you look at it like on a weekly, you know what I mean? I mean, it's actually only had a couple of good weeks. They've just been really, really, really good weeks.
Yeah.
And then from end of October to I guess for the whole month of November, diddly squat, nada.
Yeah,
right.
And it just pops 20, 30 points out of nowhere.
Right.
Yeah, it's somebody wants to own it, and then it just sits around and coasts.
Right.
And speaking of that win record, Strazza as well, man. He picks those spots. He picks the spots. He knows when to load up. Gets involved in those options. That's why he's finding those 5 and 10 baggers. I mean, yeah, it's amazing. I love Strazza. I mean, he's always on that same stock that I'm on, and he just knows how to milk those trades really, really well. This is a great market. I hope you guys are doing as well as you should be doing.
All right. Kenny Glick, Busy Man, will be live at 11 o'clock on YouTube. We'll be in his room as always. We will see him on the morning show tomorrow, but also we will see him at Chart Summit both tomorrow and on Saturday. So again, if you have not signed up for the Chart Summit, you are going to miss it, and that sucks. So use the link in the screen and the link in the chat and the link in the description, and we'll see you there. Kenny, good luck today.
Wait, one more, Ken. APLD today, and Fly X is your crazy one this morning. APLD earnings report. We're going to talk a lot about APLD on Friday, because that stock last night and so far this morning basically has every chart pattern that I love all in one day. It is absolute great action. APLD and this new bad boy, Fly X. No idea what it is, but we've traded it so far this morning. All right, good luck, my friends.
All right, see you, Kenny. APLD, that's a fun looking chart. All right, is everybody ready for what is about to go down? Grab your coffee, right? Grab a snack. I've got Jeff Weiss here in the house, coming to us live from like halfway across the world. We are transcontinental on the morning show this morning. So, Jeff, are you ready? Because I'm ready. So we're doing it. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Weiss.
Sir.
Where are you right now?
Thank God. I don't know if you could see the beach behind me. I tried to go to the beach, but I just barely made it back up here with the internet connection because I lost my internet connection, and I had to step over the bride to be tonight. Her dress was just in front of the stairs as I was running down, and I had to leapfrog over her dress. Also wound up being stopped by the authorities because I forgot to validate my train pass. And also my bus pass was not working on my phone because it wouldn't connect to Wi-Fi today when I went to do shopping for my wife. I was worried I was going to get a fine. I'd have to return the gift I got for my wife to pay the fine.
Okay.
But be that as it got my arm. Okay, you cover your head in Israel with everything.
Where are you right now?
Right now I'm in Tel Aviv on the beach, back from Jerusalem, heading back to Jerusalem on Sunday. As you all may recall, I did my last broadcast.
Yeah, you were in Ireland.
Ireland.
Yeah.
And before that, New Jersey, and hopefully I'll get up to Bethlehem, Pennsylvania, near where my son went to school, and I will be in the same house as JC Parets. Please get better soon, my friend. You'll excuse the pun, you're a valued asset to the investment community, and you're a great guy. Also want to thank you for inviting me to Miami. Hopefully I'll get back from here, rest up for
And there it goes. That's right. Jeff will be in Miami if you want to be in Miami with us.
Few days and then zip back.
Wait a minute. Jeff, we're losing you.
Okay, you know what?
Wait a minute.
How's this?
Don't move. Don't move and we'll be okay. Just don't move.
My wife tells me that all the time. And by the way, this wild Weiss is a Detroit brewery.
Cool.
And the kids, my son and his wife, got us a bunch of Weiss paraphernalia, meaning clothing, to you young people there who may be thinking of paraphernalia in other ways.
Yep.
Not that you are. But
all right, Jeff,
again,
let's
thank
talk.
you for having me.
Yeah, let's talk charts. Let's talk markets. You were kind enough to send over a few of your charts. We have them here. Slide 10, please. Chart master Rick. Let's start with the Dow Jones. So we're
Rick,
all-time
thank you for all the work you do. Like to see your face at some point. But thank you, all the people behind the scenes. Mary, Thwaites, is it Thwaites?
Yes, it is.
You just want me to come on and get all
No, not at all. Jeff, you are one of the few people, the charts you send over of all of our guests, I would say your charts are the simplest from a visual perspective, which I know JC appreciates. And
Are you saying I'm an idiot?
No, I'm saying you have 2 lines on this chart. That's it. You got 2 lines. So tell me what these lines are. Tell me what you're seeing.
Yeah, the funniest thing, the charts I look at aren't these little several day, several week charts. It's not what I do. If you want to get a move, I don't want to see a stock go from 12 to 12 and 3/8 or a half or 5/8, which is in the old days, 40, 50 years ago. And this is my 56th year investing and my 48th year as a technical analyst. And I still have things to learn. So remember, in this business, you be confident, but do not get cocky. I speak to you like I speak to the kids I lecture to, the schools I speak at, people in the industry I meet with, so forth and so on. I don't want to look at a chart and see a massive base. And the trader once at, was it UBS or Lehman, where I ran technical research, they said, look at this base, Jeff. And I said, that is a heck of a base. How far back does it go? They said 48 hours. Like, hey, I said, would you get married based on 48 hours of dating? Would you do anything based on 48 hours? Of course not.
Probably
stock,
not.
Right. They're good traders. I'm not. To me, a stock that goes from 12 to 40, 30, 20, that's a big deal. You need so many winners of stocks that go up fractionally that one loser that gaps down big one day, you're going to need a dozen to 15 winners, possibly in a row, just to break even. Now, this is a chart of the diamonds. I have found, and you do this just like little boys and girls do in school, instead of connecting the dots of George Washington or another person or the state of Mississippi.
What?
Well, actually, I got a little write-up in the Department of Education, Mississippi stuff. So a shout out.
I've lost you. I thought we were on the Dow Jones.
We are.
Okay.
But what I'm talking about is connecting the dots of a U.S. map, of a state, of a person. That's all a line chart is.
Yeah.
You're connecting the closes daily, weekly, monthly. And one of the things I do that I don't know if more than 1/100th of 1% do, I do quarterly charts and I do annual bar charts going back 25 years or so. You want to look at a stock from as many angles as possible. Remember, even you short-term traders out there, short-term trend exists within a long-term trend. Okay? Just like our good and bad days exist in our lives. And I talk about things like this in my book, Relationship Investing, Stock Market Therapy for Your Money, which relates the stock market and technical analysis to love, dating, marriage, divorce, and parenting. And I'll just mention, if it helps you to see my videos and things like that, weissspeaks.com, weissspeaks.com is my site. On this chart, there are 2 lines, a pink and a blue.
Right.
If you take a look, when I connect both of those lines to the circled weekly Friday close, okay, in late 2024, you'll notice it was a peak. And from that peak, we had a lot of trouble to that like February, March collapse of this year, I believe it was, right? Then we go straight up, and guess what? We fail precisely in the area of the line, which would be the down slanting blue arrow, where we failed in basically late 2024. And then we break out above the line and pull back to the green arrow. And after doing a little dilly-dallying on a weekly closing basis, we took off earlier in the week. Now, to me, those lines are in the low 480s. So if I started to see a weekly close kind of reasonably below 480, I would want to say, listen, this is a narrowly based average. Let's see if the broader based averages are confirming it. Again, you go out with someone, they have a good personality. It's not enough to marry them. You want to see what they are as a person. You want to see other features. You want to see how they act, how generous they are, how kind they are, what kind of parent they make. So you can't rest your hand on one chart. Go to the next one, Spence, if you wouldn't mind, or the gentleman who does that, I think. Now, this is another weekly Friday or Thursday, or Friday's a holiday, Thursday chart of the S&P. Notice that late 2021, that late 2024, and look at that in the summer after we had that huge rally. We closed up, 3,000 or so points that day. We had that huge rally. Notice we peaked at that line again. That's 3. You need 3 to really make a good trend line, not 2. And they're well spaced. Notice what happened. We pulled back, got above it, and then we did a little like squiggly, kind of like a squiggly thing toward the line, and boom. That line is now, we'll call it around 6,600. Okay? If I was home, I'd have everything laid out. I could give you the exact number and how many points per week the line is going up. But we are above a rising line. The Dow is above its rising line. And next is the chart I have shown continually. And by the way, that March low before we rallied that 3,000 points, did you notice it was a 50% retracement region of the move in the S&P from 3491 to, what was it, 62 and change back to 48? Was it 48.19? That area, it was a 50%, and we spoke about that.
Yeah, I vaguely remember that coming up at the time.
Remember that? In life, you want to take 2 steps ahead for every step you take back. And the stock market, ladies, gentlemen, kids, is a recipe for life. I believe on this show is a highly ranked chess player. And I was thinking before I went on about how the market kind of relates to chess, you have to think ahead. You have to plan many moves ahead sometime. And sometimes you have to have some sort of risk management plan to minimize damage. It's like that in life. And it's like that in the market. But because the market means money is at stake, people make decisions that they would never make in the equivalent of life. This chart, my friends, I don't want to say it's my price chart. I don't want to say, hey, look at the line I found. But hey, people don't go back this far. Most people. This line goes back a decade.
Yeah, a decade.
Yeah. Right, Spence? Look at the pink line. That was what? December 2015. Look at the 2 red arrows prior to the market getting hit. And in 2022 to 3, thank you so much. And 4, look at how he went shoom right up to the line. And guess where it failed? At the red line again. And went all the way down to near 5,000 in early 25 on a weekly closing basis. People say they're worried about who the Fed governor is going to be, who the president is going to reappoint, what the gross domestic product is going to be, what the unemployment rate is going to be. Hey, if you knew nothing else except following the highs on this chart, you would have pegged the highs. News to a technical analyst is a distraction. And if you're a true technical analyst, you don't mention words like fundamentals. You don't mention words like earnings. The price action speaks loudest because it's not the opinion of one analyst or one president. It's the opinion of millions and tens of millions of people around the world, representing trillions and trillions and trillions of dollars. Now, we got above the line. I'd say we're fairly comfortably above the line. And it looks to me
I'd say so.
that line is also, Spence, correct me if I'm wrong, because you're a young fella, perfect eyesight, around 6,600. So right now we're above those lines. And as JC has been saying all along, what foreign markets have done. I mean, wow. I mean, period. If you take a look at the stocks, Euro stocks 600, I believe it is, it's one of the steepest trend lines I've seen. It's even more than a 45-degree angle. Since it bottomed, it hasn't had one weekly close below that line. And if we had more time, I would show you that. Maybe I'll show it to you next time. But again, this isn't a level question of whether the S&P goes to 10,000, 9,000, 8,000, 7,000 or stops here. I'm going to show you one more thing. I have to go into my suitcase. Stay with me. Okay. I'm a stream of consciousness thinker. And Carrie, my wife, if you're there, send a message, hon. You're the greatest. All right. I'm going to show you. I keep these every day since 1977. Okay.
Show us. Yeah.
These are diffusion indexes, very simple daily. And I also do one on a weekly basis. And this is it. It's funny.
You're doing all this by hand still?
By hand still. Just like John Madden drew his football plays and X's and O's on the TV and put lines. When you're close to hey, look, would I rather hug a mannequin or would I rather hug my wife? I probably hugged a dozen.
I'm not sure what that has to do with the charts, but
I hugged the guy from Russia today because his kid and his daughter were so great. I said, "You did a great job. I'm giving you a hug. Do you hug?" He goes, "No, I never hug." He got up. I said, "I'm going to give you a hug."
Jeff,
he put his right arm around me and gave me a hug.
Jeff, these people in the Middle East are a
little Yuri. Hi, Yuri.
They're a little more gruff than us Americans. I don't know if they like the personal space encroachment, right? So
such great kids. Well, it's funny.
Wait. Back to the show us that stuff. No, show us your notebook again. I want just real fast. So you do this stuff every day?
Yeah, diffusion indexes. I mean, I'll be honest with you. My old ones Carrie said are starting to get moldy. She was going to throw them out.
I just want to stop and acknowledge. Remind us when did you start your career on Wall Street?
I started my career on Wall Street with Indicator Digest, and that was
in the 70s.
Yeah, I actually was a broker at Dean Witter. I got registered in 1978 when I was 22.
All right, so I just want to stop and acknowledge how cool and frankly rare it is that we can talk to somebody who has had a 50-year career, right? Like you have. Most people we talk to started their careers in and around the time of the dot-com bubble, right? Obviously, I'm much younger than that.
The NASDAQ peaked at 5178 in 2020 and resulting 78% decline until October of 22.
Right. So it's super cool that that we can talk to you, that you've been around, that you still chart stuff by hand. Frankly, I
do. I draw a lot of lines by hand. The computer helps me, but drawing them by hand and getting excited is more exciting than doing it by computer. The result is the same. It doesn't take that much time to say I'm going to put 3% of my or 2% of my net worth into stock. You don't have to fundamentally analyze anything because
do you find that you just retain the information better as writing as opposed to, like, computer? Because if you have to actually use your brain to write stuff, it does help you remember as opposed to.
That's true. I retain it on the computer as well, and also it's the environment you're working in.
Yeah,
I believe very strongly in the diet. I'm actually going plant-based with my wife, and when I get back, it's a diet. It is the sleep to some extent. It's the being careful to, like, say, I basically drink one day a week on Friday night when I'm saying my prayers on Shabbos. And I no smoking, no, substances of any kind. You've got to keep sharp. I never got into that stuff and pot and drugs because I knew all my money was in the market when I was a teenager and I was living through the 72, 73, 74 collapse. When Nixon resigned from office, people said this is a big plus. They're removing Nixon from office. Gerald Ford's coming in. We're removing a big potential overhang from the market.
Yeah, how'd that work out, Jeff?
875, he came in. The Dow was 1050 in January 73. Nixon checked out August 1st, August 2nd, 875. December and October and December of 74, 570 to 580. So if the market doesn't think it's important, it's not important. Okay. I'm trying to, that's the deal. The market knows a $20 stock is not a $40 stock in 4 years. A $20 stock is a $20 stock. So, it's only the price you'll get now. So, I try to, my book is really stories and anecdotes, and really it's very simple. It basically talks about technical analysis in completely non-technical terms. And that appeals to fundamental folks as well. And like I say, anyone with a good track record who knows how to control losses and is completely ethical and moral in everything they do matters. That's why I've had, luckily, 48 years of a good ethical and perfect ethical and moral record in the business, because I make believe anyone who asks me a question are my children or my parents.
Good. That's good.
And I tell them the MS. Oh, MS.
And this is the book, by the way. Jeff, Sam Gatlin just messaged me. He goes, "When I grow up, I want to be Jeff Weiss." So when he grows up, he wants to be you. So, and he's young.
Sam, are you covered by a medical plan?
Jeff, I
love to talk to you, Sam. Let me know. Send me your info. Spencer sent it to me here in Israel. I would love to chat with you.
I'll let you go. We appreciate the time as always. It's a pleasure to talk to you, my friend. And I'll see you next week, actually. Or no, 2 weeks. Two weeks.
God willing, I'll be in Miami. I look forward to shaking your hands and thanking all of you for your support in the times I'm on. Shalom. All good things. Bless and remember, risk management is the key in anything you do in life, because as I tell my kids all the time, you don't always get a do-over.
And on that note, Jeff Weiss, everyone, thanks a lot. All right.
God bless.
That was great. Yeah, man. Chat's loving it. I appreciate it. I love Jeff. We see each other every couple months. Great guy, great wisdom, and always puts me in a good mood. So that was wonderful. I'm glad we were able to get that to work, especially being overseas, and you never know with the internet. But that was wonderful. I hope you liked it as much as I did, because Jeff is the man. Speaking of the man, I've got the man, our options man, here with us now, Sean McLaughlin. He of the Mr. Best Year Ever, because last year was the best year ever. So let's find out why, and see if he has a trade for us today. Shall we? Chat, was that good? That was fun. Good job. Thank you, Jeff. I appreciate that. Yo,
I don't know how I follow that guy.
I was going to say I don't know how any of us follow that.
And Spencer, I'm since I noticed you really love all the Grateful Dead paraphernalia, I thought I'd wear my hat for you.
Look, I just happened to notice it's been like 4 days in a row for Kenny, so I just seems like every day with it's nothing. You wore that yesterday, I think.
I did.
Yeah. Okay. I see.
For
I
you.
paid attention.
For you.
Anyway,
So Sean is going to be interviewing Michael Martin at Portfolio Accelerator.
No. It's going to be a discussion. We are both talking. I'm not interviewing him. We're just going to lead a discussion. That's what we're doing.
Okay. And what's the discussion going to be about?
Well, we're going to kick it off. We're going to be talking real stuff, right? We're not going to be talking charts. We're not going to be talking setups. We're going to be talking this stuff. And we're going to lead off, I think. We're going to lead off with you put the trade on. Now what? Right? You've done all the work. You've done all the research. You got your trigger. You got whatever. The trade is on the books. It's open. Now what? That's where we're going to start.
Right?
That's where we're going to start.
So, Sean, I've been thinking about you a lot because I realized, hear me out. I'm going to tell you, I'm using an option strategy on hard rock bets to make the most money possible on close games. Just follow my train of thought. Example, Ravens Steelers, right? Two of those teams, it's going to be a 1, 2, 3 point game. It's going to be battle down in the fourth quarter. It's going to end close. So what you do is you monitor the live line. And I know you're telling me this isn't what it is, but I think it is. It's a short straddle. And when the Steelers go up 10 points or whatever, you hit the Ravens and you get 3 or 4 points. And then if it goes the opposite direction and the Ravens, take the lead again, the Steelers are getting 3 or 4 points, then you take the Steelers and you keep boxing it in each direction, right? It's like when it goes up to one extreme and one of the teams pulls away, you hit the live line and you take the points. And then if it goes the other way in the next quarter, or a couple quarters later, you take the other team and take the points. And you just kind of wedge it right in the middle. I'm finding so much success with this strategy. And I feel like there has to be an options market parallel strategy. So when something goes to the upper bounds of the range, you fade it. When it goes back down to the lower, you fade it in the opposite direction. And you're just betting on something to stay close, or in the case of markets, for something to stay sideways. I on something?
I think what you're hitting on here is that you're trading around a position is what you're doing, right? Mm-hmm. You're long a straddle. And when it moves one way or the other, you take the other side to kind of bring it back to the balance. So think about this. Like if you're long, a typical straddle is you're long the at the money call, you're at the money put. All right. If the market goes up, then your position is taking on positive delta. All right.
Yes.
So you bring it back to neutral by buying the now cheap puts, like you're adding to your put position to bring it back to neutral. And then if it swings back the other way, boom, you're going to make a bunch of money that way. But if you want to keep the position alive, now you're long a lot of negative delta, right? Or you're short delta. Now you buy the calls that are now cheap and you swing it back and forth. Yeah, that sounds like kind of what you're doing. And now it's in the options market, it's a tricky strategy to execute because you're dealing with theta decay, right? Especially if you got short-term options, you got theta decay. So those swings, I mean, they've got to be big and they've got to be frequent for you to make money. But with what you're doing in sports betting, it could work. I mean, look, you're playing in a world that I avoid. You know me, I almost called you JC. You know me, Strazza. I don't get on the moral high road about anything really, but I do a little bit when it comes to sports betting. It's because I have an 11-year-old son who's really into sports, and I really have a problem with the industry and the way they're marketing. But that's just me. Put that aside.
Look, I get it. I got into some trouble with some guys from the Bronx at a young age doing this. It happens. It'll happen. You got to be careful. But if you're doing it for fun, I think it's just fine. You're not going to lose anything that you can't afford to lose. It makes the games a lot more exciting for me. And this is America. We should be able to do these things.
Well, I'll tell you that Steelers Ravens fourth quarter, that was pretty damn exciting. I didn't need to be gambling to feel the excitement on that one. Wow, what a finish!
Live betting is just really, really fun for me. Hard Rock Bets account, new all-time highs. My options trading account not quite at new all-time highs. We're getting closer. We're getting closer. Past few days have been good, Sean. No,
It's been a great start to the year.
Yeah.
I mean, the All-Star options portfolio is already up like 8% on the year, which is a great start. I don't expect that to continue, but great start. And yeah, it's in my short-term trading account. I mean, I did so many trades the last 2 days. It's crazy.
Yep.
so many things popping.
We've been the same way. You're firing them out. I've found, in my career as a trader that's how it should be, right? I'll go through long periods where I'm doing very little, don't want to put trades on, being patient, waiting, and then all of a sudden they'll come like a bang, right? And I want to put on 5, 10, 15, 20 trades in a day. And you're just positioning for the different waves, right, that we get. And right now, we're getting a big wave higher in all the stuff that doesn't drive the indexes, right? Yeah. Value stocks, industrials, financials, materials, energy even had a nice pop. No waiting in the major averages. You're not seeing it there. Even speculative growth starting to pop off again. Some of these things like the quantum funds at new highs, space and exploration making new highs. Like there's a lot of stuff underneath the surface that I think for traders right now, the environment that we seem to be heading into, I mean, this is what we want as a trader.
Yeah, absolutely. Hey, before we bring Weitzel on, I see Weitzel's waiting in the wings. I love that guy. And I have a little intro I have for him. But before we get that, I just want to mention today at 3 Eastern, I'm doing the All-Star Options Jam Session. And it's going to be a different episode than we usually do because we're going to review what drove the portfolio last year. We're going to dig into the numbers. We're going to see the strategies that worked, the strategies. I usually say when I do these annual reviews, Steve, that we'll review the strategies that worked and the strategies that didn't. But for the first time in the 8 years we've been doing All-Star
Options, all worked.
Every strategy made money, which
that's incredible.
It's crazy. And that should not happen. And
no, it's rare.
And it's not something that people should expect. And it's crazy. So we'll be reviewing all that in the show today at 3 Eastern. We'll dig into what drove the portfolio, what lessons we can learn from it. So please tune into that. So sorry for the promo. But hey, Steve Weitzel, my friend, my bocce ball champion. I also want to bring that up to a little dig to Steve there. But
never got my rematch.
Steve and I were chatting on the old Twitter the other day, and he said something to me that just really, really hit me. And it was beautiful. Yeah, I was talking about a trade that I was in and taking some money off the table. It was a winning trade. And he responded to me, something I'd never heard before. He said, Sean, you got to take money off the table so you can put food on it. And I loved that. I love that. So let's bring Weitzel in and let's talk about that.
Yeah. It's very quotatious.
There he is. No musical intro, nothing. Just boom.
That's how they treat you, Steve, because I think this is ridiculous. I'll just come out and say, as if we haven't already said enough nice things about you. I'll give you one more. My favorite new show right now is what Weitzel's doing on Thursdays.
Buddy.
And we have a lot of new good shows that we've been launching lately, but this is different from anything that we're doing on this network, right? You're helping us kind of take things to next level or a much deeper conversation about our money. We're not experts in things like tax or estate planning or anything like that. But these are some of the most important things for investors and even traders to kind of pay attention to, especially as you get more and more successful and grow your accounts larger and larger over time. So kudos to you, my friend. You've been crushing it.
Thank you, buddy. I just appreciate the opportunity. It's great to be here. And I mean, we're talking about different things that don't involve trading so much. So today we're going to be talking about just the way that we review our investment strategies on a monthly basis. And I'll get into it again at the top of the hour. But, I was in a meeting with a financial advisor yesterday who's been in the business for a long time. And we just were having some discussions around investment philosophy. And we started talking about price trends. And he did not really, understand what I was getting at there. It was almost like it was a foreign concept because the way that he's run his business for a long time is he incorporates a number of different strategies into what he's doing. And so what it has just become so second nature to me,
right,
is let's how do we know if the strategies that we're using, if they're working, right? Let's get real basic and let's look at the charts and see what trajectory the chart is on. If it's up, that's great. That's what we want. We want to be involved. If it's not up, that doesn't necessarily mean that we need to be out. It could be going sideways.
Yep.
But if it's going down, maybe now is not the season for this particular area of a portfolio, and maybe we should just remove ourselves from that. And that has just become so common and second nature to me over the last 10, 12, 15 years, that anything outside of that I just don't understand. And so the fact that there are so many financial advisors that are out there that they don't know what the trend of some of the investments that they have for their clients is, that's just mind-boggling to me. But I don't think that is uncommon.
Wait, so I love what you're saying there about just like, let's keep it simple and identify the trend. It reminds me of that old saying, like, if you could throw a chart on a table and have a 5-year-old look at it, they can tell you if it's going up or down. That's it.
Yeah, and I'll tell you, when I was first putting together the building blocks of our rules-based investment discipline here, my wife and I were, expecting our first child, and I was starting to have money for the first time in my life, and I was trying to write down a set of rules that she could follow. If God forbid something happened to me, if you do these things, then I know you're going to be okay.
That's awesome.
You're going to have this nest egg that's going to be there to try to take care of you. And, maybe I'm a little too skeptical of the way that a lot of the people are in our business. Not to say that there aren't some phenomenal people in our business, but I know the way that our industry works as a general rule, and I don't necessarily subscribe to it. And so I start jotting down, if we want to focus on these things, and if you're doing these things, then I know that this money that you have that's going to need to support you and my son, that it's going to be there to take care of you. You're not going to, you're not going to get half of it knocked off if we go through a bad market. And so I just start writing these things down that's simple enough for somebody who is not in this business to be able to understand and follow. And that's really the genesis of our rules-based investment discipline, that investing we are in a complex world, but we don't have to make complex decisions. And we want to try to distill things down into their simplest terms. Yep. And so that's what we're going to be looking at in the show today, is just how we go about analyzing a portfolio on a regular basis. And that if our listening audience out there, if they went through these same simple steps, and it may take them 10 minutes a month, that they could make sure that their 401k is aligned with the prevailing trends in the market.
Yep.
And so if it's up, you want to be in, you want to be making money. If it's not, you might want to consider moving to the sideline for some period of time and protect yourself. You can always come back in, and it doesn't have to be complicated. So we're going to get into it.
You're going to give her your login info for All Star Charts?
I'm not. No, listen. Everybody needs to get their own login for All Star Charts.
Oh,
but
what a plug! That's beautiful.
I know. Listen, you don't have to pay me to say that, Steve. I say that. I say that so honestly and transparently, that for the financial advisors that are tuning in out there, and I said this one of the last times I was on the show, you want to differentiate yourself from your competition. And the best way for you to do that is to be armed with knowledge. And so you need to make an investment in yourself. You need to make an investment in something like All-Star Charts Premium, which is what I think I was one of the OGs.
Yeah.
I don't know what number sign up I was, but I was an OG.
You were early.
And I'm telling you, it has it has changed the trajectory of my career. It wasn't that I wasn't a smart guy, a well-intentioned guy, in 2013, 2014, whenever this thing was getting off the ground. But I wanted to learn, and I learned so much from following JC, and it gave me actionable things to talk to people about. And you take that information and then you apply it in a planning or a wealth management setting. One of the last shows that we did on the $1 Million Question was about when's an appropriate time to sell a stock that's down 90%. The only time in my mind when you would want to do that, first of all, I don't want you riding it down like that.
Yeah, what the fuck? How did you even get there?
Yeah, you were holding out hope, right? And you were oblivious to trends,
right?
You were not following trends, but people, that's not uncommon, and we see it. People have exposure to their company stock and their 401k or whatever it is, and there's always a reason for somebody to say like, well, I think the worst is over. We knew it was going to come down, and they just think that they don't want to miss it after, when it starts to go back up. And so, but when you have a big drawdown, and if you've got something in your 401k, your company stock, you want to sell it when it's low, reestablish your basis, potentially take advantage of something like NUA, the net unrealized appreciation. But you take what you learn from being plugged into all-star charts about setups in the market, and then you say to yourself as an advisor, how can I use this piece of information to serve my clients in their financial planning endeavors? Right. So that's just part of it.
I'm having this vision, Strazza, of like of Weitzel reviewing his customers' portfolios and seeing a stock that's down 90%, and then just sitting through a 30-minute lecture from Steven.
No, I'd try not to lecture, which my wife would argue that.
But you would do it in such a calm, mild-mannered way that no one would be flustered or freaked out. But man, you would get a stern talking to.
Well, we would just say, look, surely if that's happened, it has not happened here. But we've got plenty of people that they come in the door here, and people don't have a blank slate when they get here. Every once in a while you get a business owner who's just had a liquidity event, and they're coming from having all their eggs in their own business's basket, and now they've got cash. But everybody comes in with these legacy positions that you're having to help them unwind in some way, shape, or form. And so you'll see some of those things. But it's a conversation of, look, we want to try to help extricate you from this in the best way possible. We want to optimize your exit, but I can tell you, I know you don't want to go through that again. We don't want you to go through that again. And if we apply these very basic rules, we're going to keep you from ever being in that situation again.
Here's how trend following can help everybody, right? Especially early on when you're kind of first learning to do chart work, right, and study technicals. I used to be a big fundamental guy. A lot of ideas, a lot of opinions, right? Looking through financial statements.
Yep.
It wasn't until I learned trend following that's the confirmation or support you need. You could have a big bullish thesis. Adobe's trading at 11 times earnings. It's got to be a buy here. It is so easy to be early or just not on time, but right in this business, right? And that ends up being the same as being wrong when you consider things like opportunity cost, or God forbid, if you're trying to express that thesis through derivative markets or something like that, you might not have time, okay? So when you look at the chart and you pair that with your fundamental idea, you're probably right. But if the market isn't ready to recognize that thesis, you're dead wrong. You're going to
at the end of the day too, Strazza, like we're all trend followers. Whatever your strategy is, you could be a mean reversion trader, right? But the stock needs to trend in your favor once you're in it, right? That's the only way you make money. So we're all trend followers in some degree. So we need to understand it.
The one thing I would say, just supporting Steve's comment, and I'll tell you that in my experience, the times that I've gotten hurt has been the time where I have said, you know what, I believe in XYZ so strongly, I don't care what the chart says. I don't care how it reads. And when every time I've done, or the times that I've done that have been the times that I've opened myself to pain. And I don't like the pain, right? Most people don't like the pain. And you end up having this conversation with yourself, this introspection of, you know, if I don't want to be in that circumstance again, as strongly, as convicted as I was about that thesis, and you know what? I did turn out to be right. Maybe I had to wait a couple years to be validated on it. But it was like, you know what? If you simply would have aligned yourself with the trend, you still could have caught that. You would have had a better entry, and you would have saved yourself so much pain and suffering along the way. So let's just begin and end, if we can, with acknowledging the trends and making sure that we're aligned with them.
One thing I'll just say about Steven's show, because I was watching your last episode, which was a few weeks back, and it is the definition of bookmark this because I might need it down the road. Right. That's all I can think about the whole time I was watching. I was like, I might need this one day. I should say this is going to be useful. This is going to be useful for me one day. Right. So, and I think every show, there's only been 2 episodes. Episode 3 is in 10 minutes, or 12 minutes. So
yeah, we should wrap this up so Steven can get ready.
We are wrapping it up. So if you're watching us on YouTube, when the morning show ends, you'll be redirected automatically to the $1 million question. But the show will also air live on X and on stockmarkettv.com, as every show does. So we'll see you guys there for that. Sean, thank you. A pleasure as always. Steven, we'll see you in 10 minutes. Everyone watching us in our chat, we love you. We thank you. Do not forget about the Chart Summit, which starts tomorrow. It's tomorrow, Friday. Yes. Okay. Chart Summit tomorrow ends all day Saturday. Completely free event. Just register to get to get access and then get the recording after the fact. Use the link on the screen, use the link in the chat, use the link in the description, and then you'll be all good to go. We'll see you there. Thanks for watching. Go make some money, and happy Thursday.
Steven, see you on the bocce court in Miami. Can't wait.
Let's do it, baby. Let's do it.
We're gonna do it.
You don't want these hands, Steve.
Look.
Running.